You were listening to ChartingWealth.com for Monday, the 7th of December, 2015. As the year rolls along to a close, what do we have going on? Well, we always start with I, Y. Why? Brighten that screen up a little bit for those of you who are watching. Those you are listening by audio will tell you what we're seeing. We saw a crossover occur back on the 2nd of December, and that is a crossover on the moving average convergence divergence, which is represented on our chart as a blue line with the red signal line, showing that the market had turned over. We saw a bit of a green up candle on the 2-day candle for the 2nd, and then on the 4th, we've got a down candle. It was a much bigger looking candle before that candle was completed, but what happened over Friday changed that a little bit. If we look back at our 4-hour chart, we can see that what occurred on Friday after big moves down in the afternoon on the 2nd and the 3rd, on Friday the 4th, what occurred? Well, there was an up move in the morning and a bigger up move in the afternoon, still not as big as the prior down moves over the prior 2 days. That's why when we talk about the 2-day candle, which reflects all 4 of those half-day candles, it has a long wick on the bottom, but is not as much of a down move in the very end because there was a good bit of upward momentum. Still, though, we are crossed over going down on the large chart, and the momentum, or the derivative oscillator, has flipped over into the green, meaning that it is positive even though we're in a confirmed down move on the big chart. So we have a small chart on the 4-hour is not crossed over yet in an up move, so it's still in a confirmed down move, even though there was a good bit of movement up on Friday. Derivative oscillator still negative on that short chart. And on the long chart, as we said, we're in a confirmed down move. So both of our charts are in a down move on the IYY, which is what? The total market. Now let's switch over from IYY. We will go to SPY. What is that? Well, that's a representative of the Standard & Poor's 500, another exchange-traded fund. Looks very similar to what we just discussed with IYY. A lot of down movement on the prior day on the 2-day candle on the 3rd, and then a recovery on the 4th to some extent, but still confirmed down move on the derivative. On the derivative oscillator it flipped over, but still a confirmed down move on the big indicator that we use, and that's the moving average convergence divergence, or the MACD. Now let's look again at the 4-hour chart, and we see the same kind of movement, but it's still in a down move. Looks like it could be moving to an up move on the derivative oscillator, the derivative oscillator as well as the MACD, but still in a confirmed down move. So both of our charts, our long chart and our shorter chart on the S&P 500, are still in confirmed down moves. Now, let's move quickly on to the Qs. What's the Qs doing? Well, it shows similar down, lots of down movement that was pushed back up on Friday. But when we start looking at what's going on there, we're just now breaking through, just ended breaking through barely, it looks like, the 2-day trend line, which is represented by a blue line on our charts. We have a positive on the derivative oscillator, but still confirmed down move on the 2-day chart on the MACD. If we look at our 4-hour chart, what do we see? Well, we do see that it had crossed through it ended up crossing back through the 2-day trend line. We'll have to continue to see how that plays itself out, but we did cross over going down back on the 3rd on the 4-hour chart, and it is trying to cross back over going up on the MACD. The derivative oscillator is still in the negative. So both our Qs on the 4-hour confirmed down move and the 2-day confirmed down move, but it does look like the Qs has just been slipping sideways a good bit. We'll have to continue to see how the week starts and shapes up for all of these charts. All of them, again, confirmed down moves on the long and the short chart, but again, this market has been slipping sideways, going back and forth a little bit over and over again. Now, again, one reason we pay attention to our big charts, and again, you can see this when you pay attention only to the short charts. You have a lot of vacillating back and forth, back and forth, back and forth. But all we've had happen since the 1st of October, we had an up move, and the markets tracked up for quite a while. And only recently, since the 30th or so, or really the 2nd, have we had the markets move over in a confirmed down move on our MACD. That's the reason that we use a big chart. Along with, if we go back and look at a short chart, what do we see? Well, we see, again, a number of times where the market has vacillated and moved back and forth, back and forth, back and forth. And the reason that we want to pay attention to our large chart and use it in works with our small chart in concert. That was the word I was looking for. In concert with our small chart is so that when we have a confirmed move that's confirmed on the large chart and the small chart's moving in the same direction, that's where the real magic of chart reading helps. And you want to know more about this, all you got to do is sign up for our newsletter. You can do that at chartingwealth.com. You'll receive our link to a 15-minute training on how to read a stock chart, which will help you immensely in understanding all this. In addition to, you'll receive the layout that we use here at freestockcharts.com. That is our Charting Wealth layout with all the setups that we have. You don't have to sit there and try to replicate these. We have them for you. So go to chartingwealth.com, sign up for that. Now, lastly, let's look at gold. We're going to go to gold on the 2-day chart. And again, gold is broken through finally the down move. The 2-day trend line that we saw still hasn't crossed over going up yet, but it has broken through the 2-day trend line on that chart. But what really matters is how is our 4-hour chart working, which is what we used for so long successfully. We saw it cross over going up back on the 12th of November, and then what did the market do? It went down, and then went down, and then went down, and it crossed over yet again on the 30th going up, but it then consequently went down again, and it did cross over going up again on the 3rd. And what's it done? Well, it's actually started working again, but what it failed us at least 2 times, 3 times, well, 2 times I will count, yeah, 2 times it actually failed us. It's going to need to show itself worthy before we're going to feel comfortable counting on that anymore. And it does look like right now we have reached a bottom. A purple line that we drew at about $105.50 appears to be the bottom of where gold was, shot up significantly on the 3rd. Well, really on the 4th, that was Friday. I mean, gold just took off and bam, did it move up significantly. So again, continue to watch gold. We don't feel as comfortable about that 4-day chart as we did in the past, but we've broken through our 2-day trend line. We are seeing our 4-hour chart back to working again, and we're seeing significant up movement. Let's see what happens as the week continues to move along. Well, folks, that's where we left the markets on Friday as we move into Monday. Hope that you're prepared for a great week of doing virtual trades and practicing. Remember, we are not a stock calling service. We help you figure out what the market's doing so that you can train yourself. Take our trainings, please feel free. Go to the website, listen to all the things we have recorded for you that you'll find most helpful. And let us hear back from you. Follow us on Facebook and Twitter, Instagram, and YouTube. We love to hear from you. Thank you so much from chartingwealth.com.